Good afternoon, everyone. Today is Friday, May the 20th, 2016. We're looking at gold and silver today. And if you want my opinion on the U.S. or Canadian stock markets, check out last week's video. I covered that in detail. So today we're looking at the short term for gold and silver. Starting off with gold, this is the gold spot price. This is a 6-month chart. Each one of these candles represents 1 day of trading activity, so keep that in mind. In this particular chart, it's something we've been bullish on for a while here. And we saw a bullish cross of the 50 period crossing above the 200 period moving average, and we also had a very bullish, you can't even see it right now, a chart pattern where we had a nice cup and handle formation going on. So we've been bullish on this for a while, and we've been telling you basically anytime you pull back down here to this 50 period moving average, that's where you want to get your position added on. So that's something to think about right there. And the situation that you have currently, when we have a new pullback to that level, that's a good buying opportunity here, 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 and even now here. The thing I want to draw to your attention today will be, of course, that hammer candlestick formation after you've had a nice breakout of the previous high, right? This previous high here. So you got to close above that, all right here, and then you pull back down, test the previous resistance here. Now acting as support here, and you've got a hammer candlestick formation calling for a bottom reversal, and then the following candlestick formation gives you a higher low. This is all very bullish here. This will be a nice entry opportunity here to test the previous high here. Okay, moving on now to look at silver. This is again a 6-month chart. Each one of these candlesticks represent 1 day of trading activity. This chart technically is a bit more interesting in my opinion. You can have again the same bullish cross here, the 50 period moving back above the 200 period. Whenever you're seeing bullish price activity, you're going to see price staying above the 50 period moving average. Here you have bearish price activity where price is below that 50 period moving average, right here, 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 okay? And then when that turns, you can see that you start finding support at that 50 period moving average here, here, and then again here. Even if you fall below it for a couple of days, if it's contained, it's okay. And then you start to see a nice advance here, and then you get a normal pattern with a bullish uptrend is when you have a nice move to the upside, you'll have a retracement, and oftentimes maybe 30 to 50% of that move will get back filled. So basically that's what you see here, nice retracement. And where do you find support? At that 50 period moving average. So again, this would be a nice entry opportunity here with a test of the previous high. One more item to take note of here: whenever you're having price activity, finding support at that 50 period moving average like you have right here, even back here, all right, and here as well, that's very bullish. When you dip below it like this, we talked about this in last week's video, so check that out. You can have different ways of determining when one's actually breaking down. But in this particular case here, you've had closed below the 50 period moving average, but it was only going to fall down to this 200 period moving average where you found support there. So you wouldn't call that a break, and reverses course right back that direction. So you maintain your bullish position here. But the main thing to draw your attention to is that right here we are stronger there than we were back here. So calling this a peak here would be short-sighted. It's not something that I would do. In fact, if we look at the longer term chart, you'll see that this bullish move here is only just beginning. You can also see that from looking at this cross right here. Okay, here we are looking at the longer term chart for silver, the spot price. This is a 20-year chart, and each one of these, well, you can't really tell it counts, but basically I'm using weekly time period here, right? So right here. So it's the same basic overall story. Whenever you're in a really bullish uptrend, you're going to see price staying up or above that 50 period moving average, that blue line right there, right? You're going to continue to see that until you break down, and then you got some problems, okay? And so in this situation here, we would tell you that you've got a massive break to the downside. You'd be locking in your position or not taking advantage of that further it went down until it reversed course and came back above the 50 period moving average, then started finding support at that point. You'd be a buyer at that kind of situation there. Here we have the same situation going on. Now take note of the difference between advancing above it substantially or just minutely, okay? So this is important to take note of. If it does this kind of thing, I'm really not all that interested in it. You can bump above it here and there, and it's no big deal. It's when you advance above it substantially that I take notice. And we see the short-term chart as well showing bullish conditions. So right now in this situation, I would be bullish as I'm showing you on a short-term chart, but I want to draw your attention here that this is only, from the long-term picture, only just beginning. So we could, if this is actually a bottom and reversal and going to a bullish trend, you could actually have a much bigger move to the upside. In fact, testing levels that you've seen in the past. So I would stay interested in this position and continue to watch it because it could grow to become substantial. God bless, take care, enjoy your weekend, and be safe.